Now, illustrious emerging markets investor Dr. Mark Mobius says that Sri Lanka has resumed its path to economic growth with the recent government change. He said that Sri Lanka's economic growth was at a halt in the past 4 years. Dr. Mobius made these remarks in a forum held in Colombo today. Legendary investor Dr. Mobius participated in the exclusive forum hosted by Cinema Life, which was his only official speaking event held in the country during his visit. The invitee-only event titled Emerging Markets and Sri Lanka's Growth Trajectory was attended by influential leaders in the Sri Lankan corporate sector. Dr. Mark Mobius has a reputation as one of the most successful and influential investment managers over the last 30 years. His career and influence have earned him numerous industry awards.
That is all for the better.
This is seen by many as the
I expect most of the questions will actually come from.
In the last, what has been 4 years, there's been sort of a respite. In other words, there was a halt to growth and to improvement in the economy. Prior to that, the country was on really a growth path. And now with the change in government, I see a resumption of that previous growth path. So the prognosis is good. It looks quite good going forward. The question now is how fast the new government can move to make those changes and improvements, and that will really kickstart the economy, keep going. I must say that the opportunity at this juncture in the global economy is very, very positive for one very important reason, and that is interest rates. Interest rates are low and going lower. So we're seeing almost a deflationary environment, which is very, very good for Sri Lanka. The debts that the country has have to be paid off, and the fact that you can have lower rates can mean a restructuring of that debt and hopefully raising new debt to help the country grow. The key, of course, in any growth environment is investment. You've got to encourage investment. And that doesn't mean just foreign investment, domestic investment. Now, how do you encourage domestic investment? First way is to make it easier. In other words, government procedures, bureaucracy has to be streamlined and digitized. You know, one of the great things now is with the digitization, it's becoming much more easy. It's easier now for governments to collect taxes, to approve licenses, etc., and it's becoming easier for the public to access. Number two is taxes. You have to make a tax environment which is globally competitive. So you have to look at Singapore, Malaysia, Thailand, even India. You know, India has recently lowered the taxes. And you have to say, look, we want to be better. We want to have even a better tax environment. Now, I realize the government is faced with the debts and they faced with expenditures that they have to make. But in that context, they have to think of new ways to raise capital and to reduce government spending. And the way to do that is to start bringing state enterprises to the market. The degree to which you expose government enterprises to the market is a really big step in the right direction. So what does that mean? It doesn't mean privatization. It doesn't mean giving away the crown jewels of the country. What it means is exposing government companies to the strong light of visibility, exposure, that we're in a new beginning, so to speak. In other words, we're turning another page in the growth picture for the country, and you've got to be optimistic, really. You've got to positively and really make plans for growth. At the end of the day, that's really the key. Think about growth and try to influence the government to move in that direction. In other words, free up the process, make it easier to move forward and encourage more investment.